trade is after that rally, right on the last tick of the day, buying some VXX calls, and I went out and did it. Didn't do it for the challenge, but did it personally. I still have them, and I'll run with them here and see where things go. But one of the things to keep in mind is that a day like yesterday is very normal in bearish style markets, and I know it doesn't necessarily feel that, and everyone's looking for when's the next rally, and is this going to be the V shape and all of that stuff. But that type of move is a normal type of thing when we see markets doing what they're doing. That said, overnight and this morning, it's a pretty normal type of thing in this type of market situation, this type of market scenario. And, we saw this morning, we saw the buy-in happen early on. And one of the things that happens when we get a strong rally into a close, you get order imbalances. And so we have orders that didn't get filled at the close yesterday that need to get filled early on. We see the same action on the downside when we see a steep sell-off into the close. A lot of times, no matter where the market opens, we'll see a sell initially, and that's just dealing with those order imbalances. So we saw that this morning. Those order imbalances push things up, and it's been pretty much all sell since. And on some pretty hefty, pretty aggressive volumes here, so far this morning is we are seeing investors kind of looking at yesterday's opportunity as a sell chance more than a buy opportunity or confirmation that things are going on higher here. Now, we do not have any challenge signals here on the board this morning. We had some 3-7 crossovers yesterday, things like Microsoft and whatnot. They didn't qualify for challenge trades, and consolidation risk just too high. And let's face it, we're not talking about stocks that are getting a lot of follow through to the downside. And what things suggest is we're not going to see a lot of follow through to the upside. So some of these stocks are now in positions to where if they have a downside 3-7 crossover, they may trigger puts. So we'll see how that plays out. Something like a Verizon has a 3-7 crossover on it this morning, but is not qualifying here as a challenge trade this morning. Okay, but while the challenge remains in all cash, and we've talked about that, I'm not going to keep addressing it, but we've talked about why and how that's all going on in the ATRs and everything else. There are some trade setups out there that I like, and I showed you TLT yesterday, and kind of how I was, VXX yesterday, and how I was, dealing with that, playing with that, and how I jumped in, and then here today, there's some setups that I find to be very interesting. Let's start with Micron. Micron is one of those that, it trades like a commodity. This is essentially a commodity stock. And what do we know about commodity stocks? Commodity stocks trade with Fibonacci retracements very well. And if we put on a retracement here for Micron and put our just normal retracements, and I know I did them upside down, but full retracement is down here around the 38-39 level. Right? We have a stock who yesterday, when the market kind of broke some of the highs from earlier this week, Micron wasn't able to do that. Micron, yes, it had an up day yesterday, but it was not able to put in that same type of action that we saw in a Visa or a Microsoft or an Adobe or one of those types of things. And then early on this morning, what's it do? It breaks yesterday's lows. Right? Breaks yesterday's lows. Now, this isn't an all-aboard mortgage the house because the odds are so overwhelming in our favor that it's going down. But the odds are in our favor, and we have a good risk-reward scenario. So what's the risk-reward scenario? Well, the risk-reward scenario is simple. Stop on today's high. Right? Stop on today's high. That's the stop level. Now, it is Micron. It can gap, and you have to take that into account. But stop on today's high is, the simple stop level there for it, and then you're looking for a full retracement. Now, it's Micron; it could overreact, and all of that, and pay off even more. I would not be too shocked to see the earnings gap retested. I don't think that would happen right away, but I do think there's a strong possibility that we do see that earnings gap retested. So Micron, one of my favorite setups on the board, here this morning with the price action that we are seeing. Valero. Now, I don't want to be too bearish, so I got to find something bullish. Here's Valero. Now, Valero is an interesting stock, an interesting position. This is a company or a stock that had a very nice run here in June, and then a very normal consolidation, and what is typically a very bullish consolidation that came into it. Now, the stock started to try to break out, and then the market failed, right? Thursday, Friday, and Monday. Boom, boom, boom. Market took it on down, and breaks the bullishness of this pattern. Right. One of the reasons why writing chart pattern textbooks and blogs and commentary is very easy, because you can just look back in the past at chart patterns that worked. You don't have to, really look at the chart patterns that don't work. But the reality is many chart patterns don't work, and this is one of those. But what it doesn't do is it doesn't diminish the bullishness of what that action was. And so you have to ask yourself, okay, has anything changed, right? Has anything really changed when it comes to, Valero? And the answer is no, right? Now, it is going to be subject to market sells and everything else, but nothing really has changed. It's still a very cheap, very undervalued company. And it's one that I think from an upside standpoint to look for some sort of bear trap where, these sellers just get bamboozled is a pretty nice scenario. Now, my problem with Valero, I don't think I have a great risk-reward setup. So if I'm going out and buying it today, I'm buying it off today's open. Today's open, 78.53. That gives me about a 48 cent cushion. Doesn't give me much of a cushion, right? It's one where I'm either right and I'm in and holding and going, or I'm getting the heck out of Dodge really fast, because we could see this thing push into some new lows if we see another leg of selling come into the market. So to me, it's a very high risk type of setup. But if you're itching for that bullish element, there's Valero. I think it's very interesting there with it. Now, also on that bullish side, you could take things like an Apple, right? And we've talked about Apple, and hey, yesterday, right, breaks above the highs from earlier this week, and great. And I mentioned that, hey, on a bearish standpoint, you're looking at yesterday's lows as the trigger to get in. As that, hey, you know what, things are breaking down, time to buy puts and time to make that happen. Well, while yesterday wasn't a fun place to buy calls on Apple because the pricing of them and the risk-reward wasn't very good, your risk-reward's a lot different here today, right? To step into calls right here on Apple, the risk factor is severely diminished when it comes down to it. Now, I'm not going to say you have great odds in your favor of it working, but if you're bullish and you have to scratch that itch, you have to get in, this is the type of setup I want in. I want into an Apple with a stop on yesterday's low. Now, me personally, I'm looking at Apple, hey, if it breaks yesterday's low, I want puts. But, if you're in that bullish camp, itching, gotta jump in, these things like an Apple, there are a lot of them out there today, set up very nicely with some of the pullback that we've seen here this morning. Then there's Caterpillar. Now, Caterpillar did something interesting right back here in April and July. Set a lower high. Set a lower high by about $3. If we come and we take we throw some volumes on this low, and let me just slap the volume in here. If we take a look at the volume on these lows, it wasn't very high volume, right? Tells me this is not a very significant support level. The fact that the high was lower by $3 to $4 tells me this low could be broken by $3 to $4. We have Caterpillar breaking the lows from yesterday, right? Has that same type of micron set there. And so you're looking from a bearish standpoint. To me, Caterpillar's, one of the better ones that's on the table right here. I do suspect that, unless we see a major change in the rhetoric when it comes to the trade war, that these October lows are going to be retested on Caterpillar. And, for as bullish as I want to be on Caterpillar, for as much as I love trading the upside on Caterpillar, right now, the fundamentals, the technicals, the story when it comes down to it is going to be pretty interesting. Okay, or it is pretty bearish there. Okay, all right. Now perhaps the best trade for me personally on the board, the kind that I like to make, it comes down to a SPY put spread. Right? And this is one that I haven't put on yet. Okay, haven't put it on yet. I will look later in the day to put it on. But, here we are. Markets had a rally. Okay, nice little rally there. Some of the option pricing is normalized a little bit or stabilized a little bit. I shouldn't say normalized. But if we look at the S&P and we look at where the 200-day moving average is, we got a ways to go, right? We have a ways to go. If there's a secondary leg on this, chances are it's going to the 200-day moving average. Okay? So what do I want? I want to be able to say, look, how can I stay out of the volatility, not have to stare at this thing every moment and wonder, man, the market just moved 10 points this way and that way. What does it mean? And getting caught up in that rat race. Can I look and say, hey, normally a pullback that we saw over this period of 4 days, it's going to have a secondary sell on it. That's the norm. I don't know if it's going to happen from 295 or 297. Could. I don't know if it's going to happen right here, right now. It could, right? But how do I take advantage of a pullback back to this 200-day moving average? We talked about this same thing right back here, right? We talked about this same thing of this, how can you make that play where you don't have to get caught up in the wash of, hey, drop, pop, bounce, all of that, and just play for that down to 200-day moving average. And how can you do so with taking, a little less risk and having a lot more reward to compensate for it? Well, take a look at some of the put spreads. And the one that I'm closely looking at or closely looked at this morning, and again, I haven't pulled the trigger here just yet. I will wait till a little later today or until we see a little bit more of a rally come in today. But I want to give myself a little bit of time because when we're coming to the put spreads, the time isn't all that critical. And I want to make sure I have good spreads, right? So if I come out to the 3rd of September and I start to look on the put side, and I start to get around the 200-day moving average. Okay? The 280 and 282 strikes. These are the two that I'm looking at, the 280 and the 282. What I'm looking to do is I'm looking to buy the 282 puts. They're going for 235 at the present, right? And I'm looking to buy those. At the same time, I want to offset that cost, so I'm going to sell the 280s. So what am I doing? I'm essentially being debited $235 and being credited $2. So I'm getting in somewhere between 30 and 35 cents. That's what I'm paying to enter the trade. What does that do for me? Well, that does something interesting for me. Gives me the right to sell the SPY at 282 and the obligation to buy it at 280. Okay, so if I buy the SPY at 282, I sell it at 280, I'm making $2, right? So I can spend 30 cents, 35 cents for the ability to make $2. That's a pretty good return, right? That's a pretty good reward potential. Should it play out? Would I like it to be a little cheaper? I sure would. Can I get it a little bit cheaper? I can. I can cut off some of the time. So I can come in here the 28th of August and I can get it a little bit cheaper. I can get $1.61 and $1.90, right? So I can get it about 28, 29 cents and have the same, rights and obligations when it comes to this spread. Right. So that's what I'm looking at as far as, hey, you know what? I want some more downside exposure just in case, things fall off, or I want a bigger hedge, or, I'm not in a position where I want a bigger hedge or anything. But, I want something that, hey, if I wake up and the market's gone to hell in a handbasket because of some announcement, I want to be able to wake up and be excited about that and know I have something on the board that's paying off. And that's where I look at that put spread and say, hey, that's where I can put, allocate some money. I'll only allocate what I'm willing to lose. I can close my eyes. I don't have to sit and stare at it. What's the gain and loss today? And watch it and all of that. I can wait. I can wait it out. And if we have one of those events, right, one of those 2-day periods, 3-day periods like this in December, or like this in October, or like we saw last week, right? A home run, able to take it, run to the bank, and feel really good there about it. If it doesn't work out, I'm not sitting in a big hole. I'm not sitting where I'm going, oh man, hindsight, I wish I woulda, coulda, shoulda done, blah, 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 right? You can set something similar up to the upside, right? If you're uber bullish, and you say, you know what? There is no way in hell that this market's going down. It's going straight up from here. You can get some pretty interesting cheap spreads, right? I mean, you can come in here, and they're not as cheap as the put side, but you can buy some of these call spreads for relatively decent price. They're not as well priced as I would like to see, but they're not too shabby, and you could kind of, take that same mentality, same approach there to the upside. But when it comes to some of my favorite trades on the board, those are it. Micron, SPX put spreads, my top two there with how things are sitting here this morning and everything else. I'm not in either yet. I will be looking today to get into them and for a spot to jump into them. I am in the VXX, as I mentioned, yesterday, and I'm not going anywhere on it right here. This is one where I have half a position in it. Like I said yesterday, I'd buy half a position, and if it goes against me today, then I'll buy the rest, and if it goes for me, I'll just ride with it. So right now, I'm in the position to to simply ride with it. Thanks for hopping on. Have yourselves a fantastic day. We'll talk to you this afternoon. Take care.